Folks, a little bit different. Trumpian growth is the supply-side cure to Bidenflation, and that is the subject of the riff. Wow. Stay with me, folks, on all this. Nobody really knows what drives stocks up or down in the short run. That's why I've long been a believer in a buy and hold index fund strategy, i.e. passive investing. And I know many, many smart people disagree, and I respect that, but that is still my view. Now, all that said, it is noteworthy that the Dow Jones Index has dropped 9 straight days, as Ed reported, for the first time since 1978. Now, over half the Dow decline is a function of a 20% drop in United Health Group following the heinous murder of their insurance CEO, the late Mr. Brian Thompson. Just awful. But aside from the United Health tragedy, roughly 2/3 of the Dow components have fallen during this 9-day sell-off, including NVIDIA, which has dropped 11%. Now, nobody should push the panic button on the stock market. That's not my point. The S&P 500 actually has been roughly flat during this Dow sell-off period. But the Dow drop does give me an opportunity to raise a couple of economic policy issues that may or may not have anything to do with the sell-off. Nonetheless, I think the Federal Reserve will be making another mistake when they drop their target interest rate tomorrow, as is widely expected. And I also worry that the Trump administration and the Republican Congress will delay its tax cut plans. Again, none of this may or may not have a thing to do with the Dow correction. But regarding the Fed, very interesting story from Breitbart speculates that some on President Trump's economic team are warning that inflation risks may be underestimated, and that Jay Powell, Fed chairman, should be very careful with these rate cuts, and that Bidenflation is not dead. Essentially, the data show that in the last 6 months or so, various inflation measures have not only stopped falling, but have actually ticked up. CRB commodity prices up about 16% over the past year. Gold and silver prices up nearly 30% over the past year. Even money supply measures picking up over the past 3 months. And asset prices, especially stocks, have been booming, at least until recently. There's a lot of liquidity floating around right now. Now, profits are the mother's milk of stocks, at least to my way of thinking, and profits have been very solid. But the original Trump post-election rally was based on the hope that tax cuts and deregulation would boost business profits even more. That's not to say the Trump plan won't be implemented, but there could be creeping concern that it may come way later in the year, and that could cloud the outlook for the economy and the stock market next year, or even go into 2026. These are concerns. You can be sure President Trump and his team don't want the Fed to deliver a higher inflation rate next year. And you can be equally sure that the new administration doesn't want a stagnant economy. So I have a supply-side cure, harking back to the late Robert Mundell, who won a Nobel Prize in economics in the late 1980s and was a dear friend and mentor of mine. The supply-side cure for inflation: lower marginal tax rates, minimize economic regulations on business, thereby creating new incentives for work effort, investment, and growth. In other words, produce more goods, and that by itself would lower inflation. Second, Mundell would argue to strengthen the real value of the dollar by printing fewer dollars. Now, in today's terms, that means the Fed should cut its balance sheet from a very excessive $7 trillion to maybe something like $5 trillion. The Mundell combination would generate more goods, chasing less money. That is a cure for faster Trumpian growth and ending Bidenflation once and for all. Just think of it. And that's the riff.